So let's start with the dollar index on what I'm looking to see the week ahead and what has happened the previous week. Jumping straight to the weekly chart, we have price pushing lower below the monthly fair value gap, the monthly buy side imbalance, which you can see is between this high and this low. Of course, the month hasn't closed yet. We still have about a week to go for the monthly candle to close, so anything is still possible right now. But while this is the case, I am paying attention to the weekly chart, which is the most important chart or time frame to me. Right now, we seem to be having bearish order flow. Of course, we don't know how long it's going to last. We could see price potentially pushing as low as this, taking our sell side liquidity from those lows. It could respect one of these two candles in this area, then push higher and then follow from there. Anything is possible, but right now I'm following the order flow of the market. So going down to the daily chart, well, sticking with the weekly in the meantime, we can see at this point we closed bullish, and then this bearish candle from NFP closed below this candle. And on my last review, I highlighted how this could be possibly used as a bearish order block. Price came back to it and shot down even lower from there. So going into this week, I'm also paying attention to this area as the weekly bearish order block. So if we are bearish, if we are gonna follow price to the downside, who knows till when, could be to this swing low next, but this is actually what I'll be looking at. We could potentially find price trading higher into this inefficiency, the sell side imbalance from this candlestick's low to this candlestick's high, but I would ideally like to see price tap into this order block before falling off. The reason I selected the most sensitive part of the weekly order block is because it coincides with the monthly buy side imbalance consequent encroachment, which is the 50% of it. So if price trades higher, taking out these highs, these internals liquidities, and taps into this area, I'll be looking to sell it off, especially on a Monday or Tuesday. If price trades, let's actually set an alert to see when price trades above this point on a daily perspective, on a daily time frame. So if price trades higher into this, I'll be looking at this level to take it back down. If price does not do that, because if you notice, we have two bullish candles here. These two bullish candles could also act as a daily order block. In other words, liquidity was already swept at this point. So let's mark that as a sell side liquidity. We don't need the labels though. So at that point, we can see we sold off and closed below these two candles. So we could find price potentially trading up into this candlestick's body to tail, this tail body to wick area, and then find support or resistance for lower prices. So we could see something like this. I would especially consider this idea when or if we trade below this buy side imbalance. So we have this buy side imbalance from this candlestick's high to this candlestick's low, right, on a daily time frame. So if we trade below it and close below it, which again I'm going to set another alert from there, a conditional alert saying if we close below, I need to be alerted. So if we close below, I would like to see this area be used as an inversion fair value gap to the downside. Of course, my target going into the week, if I'm following bearish order flow, would be this sell side liquidity. Of course, you could also argue that these three candles, this 1, 2, 3 bearish candles, could also be used as a bullish order block, and that's what I was looking for initially inside of this buy side imbalance, right? So again, I'm still bullish on the dollar, but right now order flow is bearish, so I'm not going to be the one trying to fight the trend, and I'm looking for a potential move to the downside, a continuation to the downside from here. Of course, I'm not going to blindly jump in. I would look for a lower time frame market structure shift to the downside. Moving on to euro. Since we're looking for bearish dollar going into the week, on the euro I'm looking for the opposite. I'm looking for a bullish move up, and we can already see, looking at the dollar, we already closed below this last down close candle, the last red candle that we can see here on the left. We have closed below it, above it, making it a bullish order block. So in other words, there's a change in the state of delivery that has happened there, especially the sensitive parts being the wick to body. So we could potentially see price trading into this area and find higher prices from there. And on euro, we have this swing high here as our possible target for the week. So again, euro is stronger, so if I'm looking for a little bit of a move to the upside, I'll be looking for this or something similar to this. Going down to the 4-hour chart on euro USD, we also have a very similar structure here, actually inside of this daily, because this whole area is the daily bullish order block. We have this 4-hour fair value gap in the form of a buy side imbalance. So I'm going to set an alert for when we cross over it, because I'll be looking to take price higher into this buy side. Liquidity residing there, so this is what I'm looking for going into next week. Trade down into this area and push higher. Up to the right of it, we have a breaker bar, because we swept this liquidity down there. So we have a sweeping liquidity. We have a market structure shift because we got a closure above this swing high. So that's our market structure shift, making the classic 2022 model, and this area being a unicorn setup. So of course my invalidation point would be the swing low, and that will be the target going into next week. So that's all I have on euro. On pound being the weaker one, if we are going to remain bullish on the dollar, we can clearly see a massive SMT divergence, because looking at this high, it was made on the 14th of November, and compare that to euro dollar. The high that was made on the 14th of November is here, and we can clearly see that we've already swept it. Same as the dollar index, we've also swept the low that was made on the 14th of November. But when you look at GBPUSD, we have an SMT divergence between the three of them. It hasn't swept the high. So if the dollar is to remain bullish, this is the best candidate to look for more downside move. We obviously have all these liquidities that we've been targeting, but if we're going to push higher, then this would be my target, just the 14th of November high. I'm not going to look for a swing high like this one going into next week, because again the pound is the weaker of the two. Same concept, we have a liquidity sweep there, barely swept it, so basically a turtle swoop, and then displacement higher, closure above this high, and we have an order block entry. So with this one, I'll be paying attention to this area. I know we already have another area down there, that's CB, which would now be considered an inversion fair value gap, because we closed above it. I'm not sure if it's from a daily time frame or a weekly time frame. I believe it's a weekly. So yeah, we have this weekly possible inversion fair value gap, because we could find price coming back down to it and using it as support for higher prices, possibly targeting this high. So this high on a 4-hour chart, on a 4-hour time frame, is likely to be this high. So we could see price trade up there, but if I was trading GBPUSD and I was looking for higher prices, I'll be looking at this bullish order block, because this would be an order block, and technically all these red candles, 1, 2, 3 candles, would be a bullish breaker. So if we're just considering this, well, actually technically it's not even an order block, it's a breaker. It is a breaker. The entire thing, the entire 3 candles, 1, 2, 3, these consecutive candles could be considered a bullish breaker. trading down below it, into it, and sweeping this buy side liquidity, potentially sweeping the one that I highlighted there from the 11th of September 2023. So that's what I'm looking for going into next week on the pound. And then the indices. Actually, before the indices, let's cover gold, which is something I'm paying attention to. We starting off with the monthly chart. We traded down into a key level, into a high time frame PDRA. In this case, we have this bullish order block. The last down close candle before an expansion to the upside and closing above that last down close candle. That is a bullish order block. So technically, I'll be considering this. Well, let's actually undo that. I'll be considering taking buying opportunities from this area and price traded into it. Going down to the weekly chart, we can see it was a high probability trade because we have an expansion to the upside, clearing the swing high, technically making this entire area, this entire candle from here to here, the last bullish candle, pull it out in time. It's basically now a bullish breaker. So there are multiple high time frame PDRAs here that confluence. This is still a weekly chart, and we have a fair value gap there that's also being respected. On a daily chart, we have literally the same thing with this. This was where I narrowed down my entry to this daily bullish order block, because we also have a BC there. This is where I took my trade from last week to the upside. So I'm looking on gold, I'm looking for us to target that buy side liquidity, essentially the all-time high on gold. And going into next week, I'm clearly looking at this daily bullish order block. I'm looking for price to trade down into it. I have in my alert set already, trade down into it and blast off, of course targeting this high first, relative equal highs here, then finally the all-time high. So that's what I'm looking for going into next week. On the 4-hour chart, inside that area we have a fair value gap in the form of a buy side imbalance. So I'm really paying attention to this area to be the low of the week and possibly push to the upside. Also noticing another thing here, we have a possible market maker buy model being formed. In this area, we essentially had a chop, this massive area. We have a chop, we had price trading from that low to this high to this low, made a new high, made a new low that took out this low, and then back again to the range to the upside, that high. So it basically chopped around a bit here, then finally trickled down slowly, and then touched the high time frame PDRA, rejected sharply, respecting a BC for reaccumulation, second stage reaccumulation, and this will be the, I don't mean accumulation, I mean distribution. So now we are coming back to the initial consolidation. So this could be a potential market maker buy model from this high, these highs that were made here, back to the high again. So I'm looking for this idea going into next week, tapping into this high time frame PDRA and taking these highs. So that's what I'm looking for on gold going into next week. And then finally the indices, I'm going to cover both of them in one go. So on the daily chart, everything else, every other detail of my views in these markets have been covered on my previous videos on the channel. So on NASDAQ, I'm looking for a possible move to the all-time high, but on S&P 500, I'm looking to see if we can sweep these highs, this internal buy side liquidity and this one on a daily time frame. So next week, I'm looking to see if we could trade into this inefficiency that was made during CPI, I believe. Yeah, CPI. I'm looking to see if we can trade into this, possibly the consequent encroachment of this massive daily buy side imbalance, and then push continuation to the upside. That is what I'm looking for going into next week. I don't really want to see a buy side sweeping liquidity. I would like to see a sell side. When I say sell side, I mean internal sell side liquidity, because from Wednesday to Friday we basically chopped around. We can just imagine the price action here on a high time frame like this one, or relatively high time frame like this one. We didn't really go anywhere. We didn't clear buy side, we didn't clear sell side, but I am favoring sell side to be cleared into this imbalance, this massive buy side imbalance, then a continuation to the upside. So basically accumulation, manipulation, distribution, chop, Judas swing, distribute. That's what I'm looking for on the indices. There's no need to cover everything again on the NASDAQ, but It's literally the exact same structure. I'm looking for a chop, judo swing into this inefficiency, and then continuation to the upside. So that's all I have for now. Good luck and good trading.